Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yeah, Bitcoin on the 4-hour. As you can see, we had a nice rally up into the Fed yesterday, actually up to our next resistance level. In sort of the midpoint of this range, this $36,000 to $42,000 range, and then obviously once Jerome Powell started getting on the speakerphones, getting on the cameras with his speeches after obviously releasing what was a pretty dovish statement, then proceeded to jawbone, which is basically what the Fed does. They try and talk and mean talk, but realistically, they don't actually do much. So yeah, we did sell off on that. In effect, what we probably had going on anyway into this was not just in Bitcoin and the stock markets, was a nice short covering rally into it because obviously a lot of people are short given the move down, and then they pretty much reapplied their shorts when they were hearing the good old hawkish statements from Jerome Powell later on in his speeches. But the main takeaway here for Bitcoin, at least, in my opinion, was what I was saying was the base case scenario that I'd be happy with yesterday, was that as long as we hold this $36,000 level. So I know we were moving away from it yesterday, but I was like, realistically, if we hold this $36,000 level, then we won't be looking too bad. And I believe we are hitting a point of relative max pain, max FUD, basically max pullback for this correction. Not obviously just in Bitcoin, but in stock markets, which is pretty much dragging Bitcoin. I think that we've got obviously very high inflation prints, which are potentially going to ease as the latest iteration of the global pandemic is giving a lot of people giving a lot of people immunity. It is very mild, and that is basically that is basically how pandemics play out. It is doing its job. So in the UK here, we'll see a lot of easing of restrictions. Some places will be slower than others, and that will restrict supply chains. And then that will massively push inflation down. We've obviously got oil pushing up inflation, and we seem to be hitting like pretty extreme levels of potential conflict, which I think that could potentially de-escalate. Obviously hit oil prices a bit. Obviously they're structurally bullish, but this pretty aggressive move in them so far is clearly on obviously the Ukraine tensions, and then what was the other one? Yeah, I mean, just the market pricing in the rate hikes. And if the Fed is going to raise 4 times this year, and then price in another 1 raise at the start of next year, I mean, if the Fed's going to do that, the market has now had enough time to digest that information, price it in, and yeah, that's what I believe has happened. And then we can push onwards and upwards from a base case where if inflation comes down, if the economy weakens, then basically there's room to cut those amount of rate hikes, so cut the amount of rate hikes incoming. So yeah, I think we are potentially at sort of peak FUD, we can call it, for finance 1.0 markets. And yeah, we could just see markets basically climb that wall of worry, the infamous wall of worry, where you have a big pullback and you start to tentatively grind back up before then you get the confidence, the exuberance, the massive bullish moves, and then when everyone's fully bullish, then you get like an elevator shaft pullback. So that is just my opinion. I think we've got this Fed meeting out of the way. There was nothing really too untoward other than a bit of jawboning. I think the market is priced in everything that it was expecting to happen. We have got other obviously influencing factors driving everything at the moment, obviously mainly inflation, and I think that is going to ease off. I think we practically hit that peak inflation. The oil price, unless there literally is an actual invasion, then I think that will that will potentially plateau around these levels whilst the structural dynamics kind of catch up with this price level, and then ultimately drive it onwards and higher. But yeah, I think it has got it's a pretty accelerated move to nearly the $90. I mean, to get to 90, yeah, not a far, no, it didn't, not far off the $90. Maybe Brent got up to 90. But yeah, that is what I'm kind of thinking here. So back to Bitcoin. If we go back to Bitcoin here, yeah, what we need obviously is to hold this level, make this the low, this the pullback, get back above obviously this resistance here, come and test this resistance and break back above, and then I think we will start to regain confidence. Obviously that will only happen if stock markets get a move on as well. And if we look at the stock markets, they've had a pullback to a support level, now looking to break on upwards. They get back above this 4400 level or just below it, then yeah, I think we'll be looking good for a bottom here. And then yeah, the wall of worry climb onwards and upwards, and a recovery in markets into well, potentially March, April, where there may be a new spanner thrown in the works. We get a pullback, we potentially put in a higher low relative to these lows here, and then continue with our march on upwards. That is kind of the scenario that I am looking at. What else? 10-year is obviously on the face of that hawkish comments did spike up a bit. But I do expect this to ease off because like I said, I expect inflation to ease off. The 4 plus a bit rate hikes priced in for this year, I think are not going to happen. Not all, I think, because I think inflation is gonna ease off, and economic conditions are gonna decline somewhat into this year, and then yeah, this will come down with that. So I think this is just a pump off the Fed, and I think a pump off Jerome Powell's speech, and I think this will come down. But yeah, it did spike up obviously nonetheless. The dollar obviously strengthening up on the hawkish talk, of course, but is it gonna get rejected here, or is it gonna continue onwards and upwards? We shall have to see, but clearly it's looking quite bullish here. Pretty aggressive move up, so we can't really rule out a move higher. But yeah, we'll have to see. I mean, on the face of it, this does look like it is going to bust higher, but it's a case of, does that become a swing failure and back down, or does it just continue to exert pain on the market? We shall have to see. Let's look at some Ethereum. Satoshi Perry just hanging around, not doing a lot. Satoshi Perry not doing a lot, still just below this resistance. Try to get above, whack down, back below, sitting on some pretty low levels. We actually need to extend this bar across here because that is our next major level. Yeah, sitting on some pretty important levels here, as you can see. And if it holds here, it gets back above here, continues upwards. If markets recover, then yeah, that won't look too bad. The USD pairing as well, as you can see, came back into this support level, trying to hold this. Got to get back above. I mean, we just could round it up to a nice round $3,000. Get back over $3,000. Maybe we'll start to get some confidence back into this market. But $3,000 is still not higher than these levels here. Ultimately, $3,500 would be the one where I think everyone will start getting a bit more confident. But yeah, we're a long way from that. There could be more spanners thrown in the works. Don't forget, if there is an armed conflict, as I don't know if you guys are observing price action before the Gulf War and other wars, you sell off into it, and then you basically, stock markets have massive rise into the actual starting of the conflict. So yeah, so I mean, that would be, it would, if actual armed conflict broke out, potentially the risk is to the upside in stock market, ironically. So yeah, there is that dynamic. Anything else we want to look at on here? Not really. Gold getting hit, as you can see here. Obviously this is with the dollar rising, and then obviously the hawkish talk of higher rates. So gold getting hit a bit there. So stochastics wise, let's look at those stochastics. We are basically just waiting on the 5-day and weekly. So realistically, that is what I really want to look at here. 4-day obviously got some downward pressure here. 10 hour looking okay, 12 hour looking very good, a lot of room to run, daily turning up, got a lot of room to run, buy daily looking to try and turn back up, 3-day turned up from a low level, 5-day looking to turn back up as we can see here, and then weekly still coming down. So again, 5-day could turn up at the next tick. Weekly you would hope would follow relatively quickly after. Obviously bi-weekly and monthly not looking too good, but these are the ones, 5-day and weekly. If these turn up, obviously we've got 3-day, 2-day. These have got a lot of, we will turn up from low levels, daily turning up from a low level, and 12-hour lot of room to run. We have got the green shoots of a substantial bounce and recovery painted into the medium and longer time frame stochastics. So yeah, we hold 36, we push on upwards, markets start to climb the wall of worry, we or as a collectively decide as a market that we put in these lows in the stock market is looking now start to climb back up, then yeah, things could start to look good. There is obviously certain sectors of the market, obviously namely energy and financials, that are doing pretty well at the moment. Obviously financials doing well with rates going up, but there is a certain amount of rotation out of obviously tech stocks and heavily owned stocks into then others. So that rotation is obviously wobbling the ship, but that ship will eventually right again. The ship will right, and then we will then start to grind upwards with new leaders in the market. And yeah, that is basically the picture now. I personally think, in my opinion, I'm calling this in the stock market as a low, and I think we now start to grind back onwards and upwards. We'll probably take out these highs, and then yeah, we'll probably hit some trouble late March, April time, and then potentially pull back into somewhere around this. This is a very crystal ball specific stuff. Maybe I should just stop making silly predictions, but yeah, I think this is potentially the low now. But yeah, we shall see. We'll have to see if there are any other spanners thrown in the works, but I think a lot have been thrown in, a lot have been priced in, and a lot of factors influence these markets have got room to ease from these levels. So yeah, that is it, guys. Remember, this is not a financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.